Hi again. Welcome back to Wade Into Wealth. I'm Chuck Wade. My brother Ethan is here this week. And today we are going to talk about as close to what I would say is a literal dumpster fire as is possible without it being a dumpster up in flames. And that is cryptocurrency with respect to FTX. And I'm just going based on the BWI, not Baltimore's International Airport, but the Bill Wade Index, which is when our dad texts us and says,
"This is funny, yeah.
Looks like a bad day for crypto." You're like, "Oh, it must really be bad."
Yeah, must be on the news.
But also the point, and we laugh and we and joke, but the real point of that is that when a certain subset of the population starts to talk about something, it is eye-opening that this is becoming a big deal. That a lot of people know about now, not just people in our profession who read and follow this stuff every day.
Yep.
So FTX and cryptocurrency, at first glance, I thought, wasn't this the Larry David did a commercial about this in the Super Bowl? Very well done commercial.
There's a lot of
celebrity advertisers,
sports athletes have been tied to them.
So we'll get to that, but first, just as an aside, you should not be taking financial advice from Tom Brady
or Larry David
or anyone in a commercial, because the reality is, one, I will go out on a ledge and assume that we have a very different financial picture than either Tom Brady or Larry David does.
Yep.
I think that's a safe assumption to make. But at the same point, when someone is paid to endorse someone, there's already a bias there. So let's just keep that in mind. Let's get on to the good stuff. FTX is a cryptocurrency exchange.
They were the fourth largest.
And by some counts, the second. So they were one of the largest cryptocurrency exchanges. What we're going to
emphasis on were.
What we are going to talk about today, we are going to simplify this a lot. This is going to be a very kind of bare bones explanation of this because it is really complicated.
Let's first
but it's
start
also
with
not really complicated.
Yeah, right.
So go ahead.
Well, I was going to start with what's an exchange. I mean, I think of the public market is a great example of that's an exchange for if you need produce or anything else that they're selling there. It's a spot for you to go buy or sell something. In this case, this exchange was a spot for you to buy or sell cryptocurrency.
And they had their own cryptocurrency as well.
Their own token, which is called the FTT.
FTT, right.
Yep.
So their own. So think of that as if you're going to an exchange and someone wants to pay you.
You're at the public market and you're using dollars. And you're using dollars and cents. That's
they have their own currency. If the public market had its own currency that you could transact it in the public market.
It's as if you go to an arcade.
There you go.
You go to an arcade. Yep. You put in your dollars or cents into the machine. They give you tokens and coins, and all of the machines accept those tokens and coins. They're not going to accept a quarter.
So, FTX, also the founder of FTX was this 30-year-old guy named Sam Bankman-Fried, who was 30 years old, was worth about $16 billion. He's not today worth that much. Also founded a trading operation called Alameda Research. Now, this Alameda Research was founded by the same person, loosely affiliated with FTX, and they were making investments, speculative investments with cryptocurrencies. What nobody knew, and I believe Sam Bankman-Fried labeled as a mistake, is that
illegal mistake.
Alameda Research was trading and speculating with deposits from people that were using FTX, the exchange.
Yes, which just rings very true to, I'm not saying this was a Ponzi scheme, but what is typically happening in a Ponzi scheme is where they're using the inflows of money that they're getting from people to fund their operations or whatever it is, or to give back to other people. It tends to be this vicious cycle. And what they further were doing was they were then using the FTT, FTX's specific cryptocurrency token. Remember, we talked about going to an arcade, using those tokens. They would use that as collateral for a lot of the trades, speculative trades that they would make, which probably isn't right, but it's even more not right when the value of FTT plummets and
Right.
goes down 75% and is useless collateral at that point.
Yeah. So this all comes out. There's a report that came out, I think it was on Coinbase, detailing this loose relationship between Alameda Research and FTX. That starts to trigger good old-fashioned run on the bank.
Or the exchange, yeah.
Well, a run on the exchange where people wanted to get their money out of FTX.
What is a run on the bank
Yeah.
is you don't trust the institution that is holding your money or your assets anymore, and so everybody lines up to try to go get their money out of it.
Right.
Used to be, you would think of in the Depression, a run on the bank, long lines down the street of people trying to get into the bank to get their money out before the bank ran out of money
Right.
to give people.
And this was in It's a Wonderful Life, which is one of my favorite Christmas movies. There's a scene in the movie where there's a run on the banks. And what happened is exactly that. There's faith is lost in the institution. Everyone wants to get their money back. Except there was a problem at FTX. They did not have the money.
Well, yes. Often the problem in these circumstances.
They were approximately $8 billion short.
Yep.
Okay.
That's just a rounding error.
At
one point, I think they were a $32 billion company valuation. So that gives you they were 30% short just on that valuation. But
Yeah.
that's a lot of money.
It is. And so now FTX has filed for Chapter 11 bankruptcy. The founder did apologize for all of this on Twitter and says he hopes they can get it figured out. Of course, this company's headquartered in the Bahamas, which is where he is believed to be right now. I would imagine, there will be some legal ramifications for him at some point.
You think?
In time. But here's the issue. The story is what it is, and you can read about it anywhere. It is confusing. There's a lot more there that we left out that maybe isn't essential to the dumpster fire that it is. One of the biggest issues around cryptocurrency, and we have talked about this before, some people love that it's not regulated. Well, the fact that it's not regulated means there are also not a set of rules in place that would be set up to protect customers. We do not have a vault in the basement where everyone's money is kept at Brighton Securities.
Nope.
You're a client of ours. We do not hold that money, is what's called a custodian. The money has to be segregated so that if something were to happen to Brighton Securities, something were to happen to this company, your money is not gone. It is still held somewhere else that is not affiliated or tied to
Your investment manager.
the financial success of us, Brighton Securities. Same with a bank. A bank cannot be investing your money in a speculative manner. It has to be segregated.
Yeah, and there are regulations that
there
define
are rules,
all of this.
and there are regulators
For
that
these
monitor
reasons.
this, for these exact reasons.
Yeah. So while a benefit of no regulation was widely put out there, so too are the drawbacks to that as well. And I think they were even saying that they were missing $500 million from a reported hack.
There is a reported
Recently?
hack. One of the yes, this is also, there are funds that are missing that they're believing there was a hack or security breach. But don't worry, because a PR person from the company said that they have moved all their assets to cold storage, which gives me a thought of our favorite apple farm, Shoots in Webster. That's how they store apples in the offseason, cold storage. In this case, what they mean is they took them completely offline. So, look, this is a mess, and you can see that reflected. A year ago today, we're recording this on Monday. It's November 14th. A year ago today, November 14th, 2021, I think it was, Bitcoin hit its highest point, 61 Bitcoin worth $65,500. This morning, $16,607. So a drop of 74% in a year. Now, that's not all related to this, but at the same point in time, a lot of risk with these assets, and a lot of risk too when you get into things like this. And the unfortunate part, again, there are people that will get hurt in this that did not know what they were doing.
We have to remind ourselves that just because something is going up does not mean that it's the best long-term investment for you.
No, it doesn't. And the other thing that I think you see this is the guy who founded this company, he went by SBF, were his initials. Sam Bankman-Fried went by SBF. Was, thought of young genius, like Wonder Kid, like very smart, brilliant
He was cryptocurrency's golden boy.
Right. And I have no doubt, went to MIT, Massachusetts Institute of Technology. I have no doubt very smart person. People can be very smart. People can be geniuses in a field, but that does not make them the final authority. It also does not mean they're infallible, whether that is from something they intended to do or something they did not intend to do. And there is a real danger that comes with placing people up on a pedestal of, well, they're a genius, they can do no wrong.
Right.
So there's a lot that will play out from this. The fallout we have not yet seen. But what we do know is SBF, the founder of this company, is very sorry for what happened. Unfortunately, sorry doesn't come up with an $8 billion shortfall or the fact that you were not segregating customers' assets and you were investing them speculatively. Typically, that results in a very long prison sentence.
That apology reminds me of the briefcase full of IOUs from the movie Dumb and Dumber. This is good. I wrote it on a napkin, so that currency is good for you.
Well, yeah, it's when they pull the ones. To see that one? It's a Lamborghini, $475,000.
Right.
Might want to hang on to that one.
That's the one I remember. Yeah, but unfortunately, that apology won't bring the money back.
No,
and it's also not going to restore confidence in something that requires exactly that. Because when you have a form of currency or an investment that rests solely on the consumer's confidence in its ability to operate,
right,
that can be gone in seconds. And more events like this help contribute to that.
Yeah. Well, and if you had money invested with FTX, it may very well be gone.
Mm-hmm.
It likely is. I don't know how this plays out, but I also don't see this being a scenario where people are made whole or get all their money back that they'd invested.
Time will ultimately tell, but that sorry is only going to go so far.
No, and just to bring it back to what we started talking about, this is also why I thought that Larry David ad was one of the better Super Bowl ads last year. I thought it was funny. I thought it was well done. But at the same point, when someone is a paid advertiser for something, we must keep in mind they are a paid advertiser, and therefore there is a bias. Yep. And also, Tom Brady's made no secret. He's a big fan of cryptocurrencies. I don't believe all of his net worth or all of his assets are tied up in that, however.
Unlikely.
I have to imagine it's a fairly modest portion.
When you know the dollar amount, it's probably significant, but for his overall net worth, it's probably in moderation. And that's when you're looking at something that is speculative. We'll have clients ask us about speculative investments all the time. And our often first response will be, we'd consider investing as much as you're willing to lose. Mm-hmm. Meaning, just don't put your entire portfolio into it. And make sure that you're diversified so that if this goes away overnight, it's not going to derail your long-term plans.
Yeah. I was out of town last week and at a retreat and speaking to some folks, and someone asked me, what's the best investment advice you can give?
Spend less than you can make.
Oh, that's pretty good.
Yeah.
That's pretty good. But I thought about it because there's a group of people.
That's also not investment advice.
Well, but it's good advice. And so my advice was, know what is most important to you and stop paying attention to what other people are doing. Mm-hmm. The point of that being FOMO, fear of missing out. If we can avoid that when it comes to personal finance, when it comes to investing, we are doing ourselves a big favor. And there was a lot of that last year around this time when it came to cryptocurrency and people wondering, and not just cryptocurrency, it happens with anything. GameStop.
Yep.
It happens with anything. But if we can leave you with something, if we can avoid FOMO when it comes to investing in money, we're doing ourselves a giant favor in the long run because we will reduce significantly the opportunity of making an uninformed decision that we're likely to later regret.
Mm-hmm. And just because someone else tells you that it's good, without knowing all of your financial circumstances and your situation,
especially if they're being paid to tell you it's good,
yes, doesn't necessarily mean it's the best thing for you. Doesn't mean it's bad.
But it doesn't mean it's the best thing for you.
But I like what you said, which is identify what is most important to you.
Right.
because your investments, your retirement accounts, your money is simply a tool for you to get that out of life.
Mm-hmm. And that's where we'll leave it. As always, we're thankful to have you along with us on this journey to financial wellness. Wade into Wealth will return again soon.